This is Driving Solutions, exclusively on CBTNews.com.
Hey everyone, Jim Fitzpatrick. Thanks so much for tuning in to another edition of Driving Solutions right here at CBTNews.com. On today's show, Erin Kerrigan, the founder and managing director of Kerrigan Advisors and also a great friend of the show, is joining us today. So Erin, thank you so much for joining us.
Thank you so much for having me, Jim.
Yeah, it's always great catching up with you. There's so much going on right now in the buy-sell markets, and so our dealers want to, they almost hang on everything that you say when you're on to say, well, the best time to sell, what franchises do I need, what do I have, what are the values, and I know we talk about all those things. So give us an update. How has the buy-sell activity fared since the last we spoke?
Well, it is tracking towards another record year, and our firm for sure is having a record year. We've completed more than $1.5 million worth of transactions on behalf of our clients for 60 plus franchises. So
you said 1.5 billion, right?
Yes. And that's as you know, we only represent on the sell side. So we've raised 1.5 billion for our clients in the form of their sale of their 60 plus franchises. So it's been a very busy year for Kerrigan Advisors and for the whole buy sell market. That the market is very active. Mm-hmm. Particularly in high growth markets. So we've been very active in Texas and Florida, the Carolinas, Arizona, California as well. California is a little bit of a double-edged sword. There are a lot of folks that drive cars there, but it is a challenging market.
Yes, it is.
And so it's been a very busy time. I will say that buyers are becoming more choosy. So there is definitely a flight to quality going on where folks are looking for the best markets and the best franchises.
Okay.
Those deals are getting done. It is becoming more challenging if you are in a low growth market or you have a weaker franchise to get those deals done.
I would imagine, though, that there's some deals where you have a Toyota dealership sells 500 cars a month, but in the group is a Stellantis store that sells 100 and a Nissan store that sells 50, and it's kind of do we really want that? Do you ever have a situation like that?
Yes, I mean those are the sort of the cats and dogs kind of transactions, right? Where there's really amazing franchises in the mix, and then the more challenging ones. It really depends in those cases on where the opportunity is located.
Okay.
So we recently did a transaction in Shreveport, which is not a high growth market. It included a Porsche franchise. So despite some franchise, VW was in there as well. Obviously, VW is not a high demand franchise, but the fact that there are very few Porsche franchises throughout the country, we still were able to get a premium price on behalf of our client for that platform because of that halo effect of that Porsche franchise. So our firm sold more Porsche franchises than any firm in the country, and we do find that franchise in particular can effectively paper over a lot of sins, if you will, because there's just so much demand for.
And then they can also appeal to the OEM to maybe move it within so many. If they promise a big new dealership or something, can they get it out of Shreveport?
No, you can't get it out of Shreveport. It's in Shreveport.
That would be too big a move. Maybe across the street, but not completely out of it, right?
Yeah, But look, Shreveport has lots of attractive dynamics as well. It's
of course. We love you in Shreveport, by the way.
We do. We do love Shreveport.
Don't cancel your subscription just yet.
In that market,
That's right. So how are deals getting done today when it comes to valuation, given the decline since their peak, a few years ago, and normalizing profits, this year? What does that look like?
So we really see buyers focused on current earnings. I like to say to our clients, look, it's wonderful how much money you made in 21 and 22, and you get to keep all those profits. However, as it relates to your valuation's being based on what have you done for me lately? Mm-hmm. What is the business doing now? Because everyone feels that we are in a state of normalization. And so normalization is driving profits.
Yeah.
It's and valuation, pardon me. And it's important to remember that valuation of any business, dealerships, any media companies, is based on the future expected earnings. So
Right.
if we believe that today is sort of the new normal, which by the way is much higher than pre-pandemic levels,
Yes, that's
then
right.
so it's not bad. I mean, we are
No.
normalizing at a much higher rate.
Yeah.
And in fact, we're going to be coming out with our OEM survey, and that is our second annual one. And the OEM executives also think resoundingly that we are not going to normalize on gross profits back at 2019 levels. They believe we are going to remain quite significantly higher than that. So that it's our earnings are good. They're not what they were in that rarefied era of 21 and 22.
Right.
But they're really strong, and therefore valuations are very high as well. We estimate we created a new index called the Kerrigan Blue Sky Index. We estimate that the average blue sky in the industry is 80% higher than it was pre-pandemic, and so that's good for everyone.
And yeah, for sure. What are some of the other trends that you're seeing in today's buy-sell market?
Well, we are seeing that private dealers are increasingly looking to outside capital, both the family offices, other equity partner sources, as well as in some cases even the bond market. The Hudson Automotive Group just raised I believe it's $1.3 billion in a bond.
Wow.
Some of which was used to take out their financing, but some of the rest of it is going to be used for growth. And so that's pretty interesting that they are tapping into the capital markets. But we were also seeing dealers increasingly look to outside capital to grow. And I think this is typical in a maturing market. So we are in a very long process of transitioning from a more mom and pop industry to a more professionally, an industry that is tapping into professionally managed capital. So that our capital source is not simply the balance sheets of families, but rather also the balance sheets of big money managers, if you will. Right. So I do think that is a transition that continues to occur. We looked at the top 150 dealership groups, and the number of franchises owned by groups that have outside capital has increased 45% since 21. So that's a big increase.
Yeah, it sure is. Oh my God.
Yeah. Now, another thing that we are noticing is that the reason that these outside capital folks like our industry so much is because there are limitations on how many stores each of the largest groups can own. If I'm an investor, that's pretty exciting, because that means that I don't have quite as much competition necessarily from the largest consolidators, because some of them are tapped out on.
That's a good point. That's a very good point.
So in very few industries you see a huge, you have 18,000 car dealerships, and the largest players may not be able to buy any more Toyota stores. So me as a new entrant backing a great group can go buy maybe 20 Toyota stores at some point.
Sure, that's a very good point. That's a very good point.
And if you look at, for instance, the Larry Morgan Group, they really are the best example of that, right? Yeah. They've grown at a 20% compounded annual rate since their founding in a decade. So in 10 years, they've grown 20% every year in the number of dealerships they own, and they now have 75 rooftops, backed by outside capital in the highest demand market. Mostly that is to some degree because the competition for these big deals is not as intense, because some of the biggest groups are limited in their growth.
Yeah.
It's a framework.
That's something. And in the event that a group wants to buy another group, but they're maxed out on, let's say, Toyota, and there's a Toyota store in that purchase, can an agreement be made that, hey, you've got to sell either that store or another store within a certain period of time, so it doesn't hinder the sale of the group?
Yes, that happens all the time. And I would say Toyota in particular is the most, they work the best in our in our experience with buyers, and to make sure the seller's deal gets through, and say, okay, look, you're going to have to, this is how we're going to do this. So they don't impede large transactions from closing. they're very respectful, I would say, of the sellers who are looking to monetize often generations of hard work.
Yeah.
And so they usually there can be effectively deals made between the OEM and the buyer to ensure that they still meet the framework agreement, and that can be handled post-transaction.
Okay, gotcha. Has there been much of an impact on the buy-sell market given the CDK outage? I know that wreaked havoc on dealers, obviously, for a week or two, for sure. But did it have any impact on your business or on the industry?
So it obviously had a huge impact on the industry if you just look at AutoNation's announcement. So it did impact the industry. It certainly impacted some of our clients who we were in the midst of working with them to prepare to go to market, and they couldn't get we couldn't get financials out of them. So that delayed things a bit. We also had situations where there were closings that we didn't personally, but we know of many in the industry that had to be delayed because you can't close, or it's very difficult to close. You don't have access to your DMS. I think that more broadly and on a long-term basis, I have heard folks say that after this, it really did heighten some dealers who were on the fence about selling to say, you know what, this is just, I'm going to consider a sale now. And even though it was a one-time event, it's sort of a reminder of how
you never know, right?
Yeah.
Yeah.
You just never know if a pandemic or a hurricane or a DMS outage or anything
or another
recession
hits, and you're just like, what am I doing?
Right. And we still have this EV challenge sort of hanging over the industry that remains, although obviously the OEMs are backpedaling quite a bit, but it's hard to backpedal when you've already committed capital and infrastructure and manufacturing to vehicles. It's not, you can't just turn off switches that easily.
That's right. And as one dealer said, I'll make more money when I sell my dealer group. As I said, why are you selling? You've had it for 30 years. And he goes, I'm going to make more money, Jim, sitting on the back of my yacht on my investments of that money than I would running the dealership. He goes, so why put up with the headache? So interesting.
Yeah, I mean, now in fairness, dealerships have provided really high return on equity for a very long time.
Yes, for sure.
But on a risk-adjusted basis, maybe that is right.
Yeah.
If you can today earn 5% on money, just
well, I think, and because this guy he's also a tech entrepreneur on the side, and he's invested in some companies that have had huge returns. So I think he saw it as, this is going to give me even more, powder, so to speak, to invest in other companies that have got high yields. So,
well, I always like to say I have yet to have a client call me and say, I really regretted selling my business. I've never had that happen. So I think that's indicative of it. We love this industry, but it's a lot of work, and it's all changing, and you got to be on your toes and nimble, and I think more so than ever today.
No question about it. But although there are people out there, like Van Tile and Mike Maroney and so many others that did leave the industry with a nice big, fat check or, an account or whatever, and they got right back into the business when their non-compete was up, crazy.
It's a hard industry to walk away from. It's a wonderful, I think that really speaks to also just the general entrepreneurial spirit that exists within auto retail that is infectious. And I certainly feel that way.
That's right.
I love everything. All our interactions with our dealers they're such incredible entrepreneurs.
Yeah, for sure. Hey, switching gears a little bit, Kerrigan Advisors is releasing the 2024 Kerrigan OEM survey results in July, which is what we're in. What are some of the key findings from that report?
So it's very exciting. It's our second annual survey, and this is of OEM executives, so generally managers or higher. And these OEM executives don't get surveyed very often.
No, I was going to say that I'm surprised they even answered you, but I guess you got a great response.
Yes, they do answer us. It's of course anonymous, so it's but it's a broad sweep of every OEM responding, and executives from the OEMs, and so some pretty exciting findings. First, the OEMs do believe dealership profits are expected to normalize around this year. 62% of executives think that new car margins will be normalizing above 2019 levels. So we think that's hugely positive
of course.
for the industry. We also asked them about the EV situation.
Okay.
And these results we found quite astonishing. 86% said that their OEM is developing contingency ICE and hybrid production plans. So that's a pretty big percentage. Yes.
86%. So basically all of them, right?
Basically all of them. And two-thirds do not believe that their OEM will achieve their proposed sales goals for EVs.
Oh my gosh. Wow.
So
major news there. I mean, that's
over 110 executives responded. So this is not a small sample set. 81% think the EV transition will not proceed as planned. So all of that is pretty astonishing. And we did ask them why. Why do you think it's not working? And interestingly, the highest answer, the highest percentage of OEMs felt that high vehicle prices was the biggest challenge for EVs.
Okay.
Followed by lack of charging infrastructure and weak customer demand. Now, EV prices are coming down, so my guess is next year when we ask that question, it'll be charging infrastructure.
Yeah.
But I thought that was really interesting that
interesting. Yeah.
Was the top 30, I believe it was 39% said prices was the main reason that we weren't selling as many EVs.
So they just jumped the gun on this whole thing, right? I mean, really at the end of the day, it's not really the car's fault per se. They're great cars, but really the consumers are not there in the levels that they anticipated. The infrastructure still isn't there. So it's really not anything else other than just bad estimating, right? Where they said, we think it's going to be here. They build the cars, they ship them. We had kind of a plateau of consumers, and now they're dialing it back.
Yes, and Ryan Kerrigan wrote an op-ed in Automotive News recently that was covered, and I don't know if you fully blame the OEMs as much as you blame the government, right? Because
this is true, very true. Yes,
they were responding to pretty draconian requirements.
That's right.
That came down from on high.
Yes,
and those folks on high. Anytime you have that happen when you're not at the local level, really understanding the customer. I mean, who knows the customer better than anyone? The car dealer, the auto retailer. And I think if it had been a bottoms up question, dealers want to sell cars. That's all we want to do, and service cars. So
that's right.
So no one's anti-EV. It's just that we're anti-vehicles that buyers, that consumers don't want.
That's right.
That's not positive for anyone. So.
That's right.
So I think had the government gotten closer to the consumer via the retailer, we wouldn't have been in this fat mess.
Well, you remember, or maybe you don't remember, you're probably younger than I am, but I remember in the car business when, there was a gas crisis in the late 70s, early 80s, and people were like, there's no way I'm driving these huge, domestic vehicles that took up a whole block, to turn. And they just went for all of the the great imports that were out there. I happened to be selling Toyotas at the time, and we were just, it was like shooting fish in a barrel because people just couldn't get enough of their imports for lower gas mileage and what have you. And of course, then the U.S. market turned around and said, okay, we're going to build those as well, and down came the size of cars, and and gas mileage was a huge factor. But so it's the same kind of thing. If the consumers aren't there, this thing's going nowhere. And you brought up a great point. It is in big part, government's fault on all of this. That being said, we're in the middle of a crazy election. As I've said before, I don't care what side of the aisle you're on. It's just crazy. So what impact will a Trump administration have, let's say, if he wins in November? And of course, the follow-up there is, what's your take on Elon Musk supporting Trump? Here he is, the head of the biggest EV company out there. But Trump has always been like, hey, it's a free-for-all. Let's do away with these EVs and let everybody drive what they want, and don't put these demands on there. What kind of an impact will that have on EVs?
I do think that Trump is a free markets guy, and I think that he will pull back these requirements. And my expectation is that there is still demand for EVs. There are parts of the US that it's very attractive. I think Automotive News just did a whole analysis of the cost benefit of EVs, and eventually my guess is a lot of folks will want to drive EVs. I personally would like to drive one simply because I don't like going to the gas station because
That's right.
So I think there's some benefits, and the market will develop more naturally. I think Elon Musk's backing is more driven that he's more of a free markets guy and not a big government guy himself.
Yeah.
He developed and built that company without the government mandating per se that people buy his car. And I think I think he's just more of a free markets guy. And I think at the end of the day, that's how our country has succeeded with with less regulation and just really more driven by where the markets and where the consumer wants to go. So I think who knows what's going to happen. This election is really, it's just crazy. So I do think a Trump administration will be very good for the car business.
Yeah, for sure, for sure. In light of these shifts in the OEM's perspectives, do you have any other insight into their views on data ownership with the customer?
Well, so it's pretty interesting. So we track in this OEM survey, we also track questions on, where do you think the data ownership is going to be? Where do you think the sales model is going to go? And there was a big shift with the pullback in the expectations with EVs. They also pulled back dramatically on their expectations for an agency model. So basically, very few believe an agency model is now coming to the U.S. And whereas a much larger percentage thought that might happen in our last year's survey. Likewise, they also saw a decline in expectations for facilities. So, instead of quite a significant percentage expecting facility investment requirements of a dealer to go up, now much fewer believe that. And I think that is because of the EV charging infrastructure and all those things that the OEMs were requiring. We saw what Ford just did. They pulled back that whole thing. So I think that's interesting. And then as it relates to data, though, that did not change. That changed in a more negative way, where more executives think that 19%, in fact, believe that the OEM's going to own the customer relationship and the data in the next 5 years. And that's up 16% from last year. So that's surprising, and I think also an indication where the OEMs still have this fantasy of, I think, being a Tesla and owning that customer relationship, despite the fact that obviously we have an inventory problem in the EV world, and they are backpedaling from wanting to have the ownership of necessarily the inventories. So I think we continue to be in an evolving market. However, ultimately, the results of this survey do point to the critical role that the auto retailer plays in the whole ecosystem of the auto industry in the U.S., and that is clearly not going anywhere. Yeah.
It's alive and well, and you're having a record year there at Kerrigan Advisors, and many more closings to come, right?
Yes, we're very fortunate. We work with some wonderful families and dealers when they do decide it is time to sell. We are honored to shepherd them through that process and ensure they maximize the value of the families' generations of hard work.
Yeah, you're an important part of that whole equation, that's for sure. And I know dealers for the last 10 or 12 years have really been counting on your advice, and it's a big thing when a family decides, okay, we're going to take this asset that we've managed and had for so many years and turn it over to the next owner, right? It's a very, very big move. They got to make sure they're with the right group. So I know you guys have been doing a great job. So Kerrigan, thank you so much. Erin Kerrigan, the founder and managing director of Kerrigan Advisors. You've seen her here before on CBT News. She's all over retail automotive. If you go to NADA, you're there. You go anywhere in the industry, and Erin or Ryan are speaking at that event. So thank you so much for joining us. It's been great.
Thank you so much, Jim. Have a great summer.
You too.
Thanks for watching Driving Solutions, exclusively on CBTNews.com.